We've got Peter Elston, who's head of Asia Pacific Strategy at Aberdeen Asset Management, who joins us on the show from Singapore. Now, Peter, to begin with, do you still believe that Europe is a threat to Asian markets, and how much of the potential bad news would you say has been priced in?
In terms of many of the numbers at the moment, whether you're looking at employment data, whether you're looking at industrial production numbers in the US, it does seem as if there is the semblance of a recovery happening. On the other hand, you look at what the Fed statement said last month, and of course, the action of the Fed was to extend the period for which they would keep rates at zero from the middle of next year to right through the end of 2014. And the statement referred to weakness in business investment. If you looked at the fourth quarter GDP numbers out of the US, on the face of it, they looked okay. If you strip out inventories, growth was still extremely weak.
Afternoon, Peter. I wanted to get your view on India and China after the kind of rally that we've seen so far, because a lot believe that the rally has been a bit speculative. Would you agree with that? And do you think that allocation of serious long-term capital is increasing in favor of the region now?
Well, I think you have to distinguish between two things. Firstly, the rally in their equity markets, and secondly, what's going on with respect to their economies. Certainly their markets have been doing very well, but that's been simply the result of improved risk appetite globally. And given my previous comments about what I sort of expect in terms of what might happen in Europe and the US, I wouldn't expect that improvement in risk appetite to last for much longer. When you look at what's going on in their economies, that's a slightly different question. And in the case of India, we've seen growth rates fall a little bit. I think the forecast for growth is now at or below 7% for this year. So that's quite a marked decrease from previous years. But inflation remains stubbornly high, and this, of course, poses a very significant quandary for the RBI.
Right, now, Peter, just focusing on India, the government in India has revised growth to a sub 7% level. Does that number worry you? True,
growth rates have fallen, and there's a lot of talk about the need for a second round of reforms. That the reforms that were implemented in 1991 by the current Prime Minister, who was Finance Minister at that time, it's felt that these reforms have now sort of run their course, and that there's now a need for a second round relating more to the supply side of the economy, India's labour market, changes in laws with respect to land acquisition, the power sector. It's absurd that India is importing coal when it has the fourth largest reserves in the world. These are problems that do need to get addressed. There is a little bit of paralysis on the political front, but we see these issues being resolved at some point, and therefore we remain bullish. If not on the economy, certainly on the companies that we're invested in India.